Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way. Today's deep dive is about a really massive historic shift in the tech and semiconductor market.
Oh, absolutely. It's a total watershed moment.
Right, because on March 24th, ARM officially announced its first physical chip for data centers. They're calling it the ARM AGI CPU.
Yeah, and for an everyday investor, this is a huge deal. According to recent analysis, this is the first historic instance of ARM actually expanding from just providing computing blueprints to, selling a physical silicon product.
Which completely changes how you need to think about AI investments. I mean,
Yeah.
to set the stage for you, if you're a beginner investor, you might not know ARM's name, but you use them.
Mhm.
Traditionally, they have been entirely behind the scenes, right?
Exactly. They were essentially an invisible layer in your tech.
Right. Like, to understand this, imagine the world's most elite architecture firm.
Mhm.
The firm that drew the blueprints for basically every single house on your block.
But they never actually lift a hammer.
Right. For decades, they just sell the paper. But suddenly, one morning, they buy a massive fleet of cement trucks and decide, hey, we're going to start pouring the concrete ourselves.
Which is a huge structural pivot, and that analogy is spot on. Historically, ARM's product was just intellectual property, or IP.
So just the blueprints.
Yeah, exactly. They drew up these incredibly efficient digital blueprints for computer chips, sold the licenses to builders companies like Apple or Samsung, and then collected a royalty fee every time a chip was made.
So they never had to build the skyscraper. But now, with the ARM AGI CPU, they are physically pouring the concrete. So let's look at what they're actually building. Based on the data, this new chip features up to 136 Neoverse V3 cores.
Which is a staggering amount of processing power.
Right, but it also runs at a 300-watt thermal design power, or TDP. And, for an everyday investor, hearing about watts and cores might sound like just tech jargon. Why does this actually matter?
Well, it matters because of electricity. You have to realize a modern AI data center isn't just a room with some computers. It is a massive industrial facility.
Right, they use huge amounts of power.
Exactly. The biggest bottleneck in AI right now isn't making the chips, it's actually finding enough electricity on the local grid to turn them on. And those traditional by 86 chips that usually run these centers, they draw a massive amount of power.
So the 300-watt TDP on this new ARM chip.
It's a game changer for efficiency. The data shows this chip offers more than double the performance efficiency per rack compared to traditional by 86 chips.
Wow, double.
Yeah. So in the real world, a tech company can pack twice as much AI brain power into the exact same building using the exact same amount of electricity.
Okay, so that value proposition is super clear. You save power, you save money. But if I'm looking at my portfolio, I see a bit of a red flag here.
How so?
Well, if ARM is suddenly jumping into the really expensive, highly complex world of physical manufacturing, aren't they basically abandoning that highly profitable blueprint business, the one that made them a good investment to begin with?
Yeah, I mean, that was a huge fear initially, but looking at the recent financial analysis, that's just not the case. They aren't abandoning the blueprint business at all. They are layering this new hardware business right on top of it.
Oh, really? So the old business is still running?
More than running, it's growing.
Yeah.
If you look at the data for Q3 of their fiscal year 2026, ARM hit $1.242 billion in total revenue.
Okay.
And out of that, their traditional royalties brought in $737 million, and their licensing brought in $505 million.
Wait, so the traditional stuff is still bringing in massive cash flow?
Exactly. Their data center royalties actually grew over 100% year over year. And their CSS licenses, the premium blueprint bundles, grew to 21 active agreements. So the foundation is incredibly solid.
Okay, that makes me feel better about the financials. But that leads to the next question. If ARM is suddenly building these, physical skyscrapers, who is actually buying the buildings?
That is the most important part of this whole deep dive.
Right, because according to recent analysis, there are two massive players driving this, Meta and OpenAI. But they are doing it in completely different ways.
Yeah, let's start with Meta because they are the anchor here. Meta isn't just a customer buying a finished product off a shelf. The official data designates Meta as a lead partner and co-developer.
Wait, so what does co-developer mean in this context? Are they actually designing the chip together?
Essentially, yes. This ARM AGI CPU is engineered to work seamlessly right alongside Meta's own in-house AI accelerator, which is called the MTIA.
So it's custom fitted for Meta's servers.
Exactly. ARM's structurally integrated with Meta's engineering teams. And to really understand why ARM would do that, you have to look at Meta's capital expenditure, or CapEx.
Right, follow the money.
Always. The data shows Meta spent $72.22 billion on CapEx in 2025.
That's a huge number.
And it gets bigger. Their projection for 2026 is between $115 billion and $135 billion.
Wow. I mean, just for context, looking at the current macroeconomic climate,
Yeah.
the current U.S. president is Trump, and there's a lot of focus right now on heavy domestic capital investment.
Right, absolutely.
And Meta's is basically spending the GDP of a small nation just to build out computer servers in America in a single year.
It's unprecedented scale. They are taking their ad revenue and turning it into physical AI infrastructure. So Meta is the anchor demand.
Okay, but I have to push back a little here.
Sure.
If ARM is co-developing this specifically to work with Meta's hardware, doesn't that just make ARM a custom chip shop for Mark Zuckerberg?
Yeah.
As an investor, I don't want them just building a vanity project for one company.
And that is exactly why OpenAI's involvement is the critical second piece of the puzzle, because OpenAI is not a co-developer. They are a launch partner and an early adopter.
Meaning they are buying the standard off-the-shelf version.
Exactly. According to the data, OpenAI is using the AGI CPU to strengthen what's called the orchestration layer of their AI workloads.
Okay, for the beginner investor listening, what is an orchestration layer?
Think of a massive AI workload, like a huge, chaotic airport. The orchestration layer is the air traffic control tower. It schedules tasks, moves data around, and keeps the whole system from crashing.
Oh, I see.
So OpenAI is using ARM's chip for that control tower. And that proves to the market that ARM hasn't just built a custom tool for Meta, they've built a universal platform.
Right, because if Meta is the anchor funding it, OpenAI is the proof of scalability. It shows anyone can plug this chip in and use it.
Exactly. It validates the whole project.
Okay, so we know who is buying it and what it does.
Yeah.
But, in the stock market, timeline is everything. When do these chips actually hit the market? Because I've seen rumors saying it's happening this year.
Yeah, we really need to clarify that because those rumors are totally false. Based on interviews with ARM's CEO, Rene Haas, the 2025 timeline is not happening.
Really? So what's the actual timeline?
Well, Haas confirmed the test chips are working perfectly in the lab, but actual volume production, mass manufacturing and broad distribution won't begin until the second half of 2026.
Got it. Second half of 2026. But the way they're distributing it is actually really interesting, too. It's not like ARM is just mailing a microchip in a cardboard box, right?
No, not at all. They're using an ecosystem strategy.
Right, like the car analogy. If a company just drops a highly advanced V8 engine on your driveway and says, good luck building the rest of the car.
You're not going anywhere.
Exactly.
Okay.
The engine is useless without a chassis and wheels.
And ARM knows that. Selling just the bare chip puts way too much burden on the buyer. So according to the data, ARM is partnering with major server builders, OEMs and ODMs like ASRock Rack, Lenovo, Quanta, and Supermicro.
Oh, so they are building the whole car.
Yes. They are working with those manufacturers to deliver complete, ready-to-plug-in server racks.
So a company can just buy the fully assembled server, roll it into their data center, plug it in, and start running AI.
Exactly. And it goes even further. Meta is actually going to share the board and rack designs for these systems with the Open Compute Project, or OCP, later this year.
Wait, what is the Open Compute Project? Why should an investor care about that?
It's basically an open source library for data center hardware. By sharing the blueprints, Meta and ARM are making this an open standard. Anyone can copy it.
Which means it spreads faster.
Right. In data centers, the winner isn't always the one with the fastest chip. It's the one whose technology is the easiest and fastest to deploy at massive scale.
That makes total sense.
Ah.
So with this whole ecosystem ready for late 2026, let's talk numbers. Because there is so much wild hype out there. I mean, I've heard rumors of a $100 billion revenue goal for ARM. I've even seen headlines throwing around the word trillion. Are those numbers real?
We need to definitively bust that myth right now. Based on recent analysis, ARM is absolutely not projecting $100 billion in revenue for this chip.
Okay, so what is the real official projection? Let's get the facts out there.
In recent interviews, CEO Renee Haas stated the realistic expectation is that the AGI CPU could generate about $15 billion annually in about 5 years.
Okay, 15 billion.
And for the entire company, including the new chips and the old blueprint business, the projection is around $25 billion annually in that same 5-year time frame.
I mean, $25 billion is still a massive, incredibly profitable business, but it is definitely not $1 trillion. So where did the market even get the word trillion?
It's a classic misunderstanding of a financial metric called total addressable market, or TAM.
Hmm.
The $1 trillion figure is the estimated size of the entire global AI infrastructure revolution by 2030.
Ah, okay, so it's like the California gold rush.
Exactly.
The total value of all the gold in the mountains, the new towns, the railroads, the whole economy might be worth $1 trillion. That's the total addressable market. But ARM isn't saying they're going to mine all the gold themselves.
Right. They're just selling the high-tech shovels and pickaxes, and they expect that specific business to bring in $25 billion.
That makes so much more sense. The market just conflated the size of the whole ocean with the size of ARM's specific boat.
That's a perfect way to put it.
But here's the crazy part. Even when you clarify that the target is 25 billion, and even knowing mass production isn't until late 2026, the stock market still went absolutely crazy on March 24th.
Oh, it's euphoric.
Yeah. Looking at the data from March 25th, the very next day, ARM stock jumped 20%. They added roughly $29 billion in market cap in a single day. Why did it pop so hard if the revenue is years away?
Because the announcement signaled a fundamental shift in how AI actually functions. Up until now, AI investing was completely dominated by one thing: GPUs, or graphics processing units.
Right, companies like NVIDIA have had a monopoly there because GPUs are great at doing massive repetitive math to train AI models.
Exactly. But AI is evolving. We are moving from basic generative AI to something called agentic AI.
Agentic AI, let's break that down for the listener. What makes it different?
Well, early generative AI is like a really smart encyclopedia. You ask a question, it gives you an answer. But agentic AI acts as an autonomous agent.
Like it does things for you.
Yeah, exactly. It doesn't just write an email. It independently opens your calendar, checks your schedule, books a flight, and sends invites to your coworkers without you clicking anything. It takes complex, multi-step actions.
Okay, so how does that shift the hardware from GPUs back to CPUs?
Let's use an analogy. Think of training an AI model like a restaurant prepping for a massive dinner rush. You absolutely need a GPU. The GPU is like a giant specialized machine that can chop 10,000 onions at the exact same time.
Right, raw data crunching.
Yes, but agentic AI is the actual live dinner service, and for that you don't need the onion chopper. You need a CPU. The CPU acts as the head chef standing in the path.
Oh, I see, the orchestrator.
Exactly. The head chef reads the tickets, tells the grill when to fire the steaks, times the appetizers, and makes sure the final plate is perfect. Agentic AI needs those highly efficient head chefs. It needs advanced CPUs for logic and control.
So Wall Street basically realized that you can't build the next generation of AI without massive amounts of CPUs. It's the return of the CPU. And ARM just stepped up to supply them.
Precisely. The investment story expanded beyond just a GPU monopoly.
Okay, that is an incredibly bullish narrative. But, as an investor, you always have to look for the downside. Every big pivot has risks. And I want to talk about ARM's reputation. Because historically, ARM was the Switzerland of the chip world.
Oh, completely neutral.
Right. They sold blueprints to everyone. Apple, Samsung, NVIDIA, Qualcomm. They didn't play favorites. But now, by making their own physical chips, aren't they basically a referee taking off the stripes, putting on a jersey, and joining a team?
That is undeniably their biggest strategic risk right now.
Because they're going to compete with their own clients, right?
Exactly. They are transitioning from an invisible partner to a direct competitor. Massive clients like NVIDIA and Qualcomm who use ARM blueprints are now going to be fighting ARM for the exact same space in the data center. Managing that ecosystem trust is going to be incredibly difficult.
Yeah, that's a huge qualitative risk. But what about the financials? What happens to the balance sheet when you go from selling digital files to physical silicon?
It gets a lot heavier and a lot riskier. Selling IP has staggeringly high profit margins because duplicating a digital blueprint costs nothing.
Right.
But physical hardware naturally compresses your gross margins. You have to manage global supply chains, warehouse inventory, and massive working capital.
You have to buy the concrete before you can sell the building.
Exactly. And remember, ARM doesn't own the factories, the foundries that print the silicon. They have to rely heavily on third parties, primarily TSMC and Taiwan. So if there's a supply chain bottleneck, ARM is financially exposed in a way they never were before.
And there's also the concentration risk, right? I mean, we talked about Meta being the anchor tenant with their massive CapEx budget.
Yeah, they are funding a huge part of this.
But an anchor can also drag you underwater.
Yeah.
What if Meta pivots? What if in 3 years they decide to just use their own MTI-8 chips and drop ARM? ARM's physical revenue could just evaporate.
It's a very fair point. Tying so much of your future to the strategic whims of a few anchor partners fundamentally alters ARM's risk profile.
Right. So just to summarize this entire deep dive for you, ARM is making a historic leap. They're going from an invisible architect selling digital blueprints to a heavyweight manufacturer selling physical data center processors.
All to capitalize on the return of the CPU for agentic AI?
Exactly, supplying the head chefs. And they have Meta and OpenAI backing them with volume production slated for late 2026. They are aiming for a realistic $15 billion slice of the massive AI infrastructure market. But to get it, they are trading the safety of being neutral Switzerland for the high-risk, lower-margin world of physical manufacturing.
That perfectly captures the landscape. And to leave you with a final thought to mull over as you research this space, ARM is building a great standard open ecosystem platform. But their ultimate test over the next 5 years won't just be beating traditional x86 chips.
What will it be?
The real war is whether ARM's off-the-shelf platform can outperform the highly secretive, custom, in-house chips that tech giants like AWS, Google, and Microsoft are currently developing entirely behind closed doors for their own private use. The competition is only going to get fiercer.
That is a fascinating dynamic to keep an eye on as this infrastructure build-out continues. Don't forget to subscribe and hit that like button.